Now let us learn about the branches of accounting. Basically, we have three categories or branches of accounting. One is the financial accounting, two, cost accounting, and three, management accounting. Why not one? Why we have three? What is the basic reason for having three branches? Because the whole idea is the objective of one is different from another. The objective of financial accounting is different to that of cost accounting, to that of management accounting. And that's the reason why we have three branches of accounting. So let us see one by one what are the objectives and how they are different. Let us start from financial accounting. Financial accounting has two objectives. One, to know the profit or loss. Number two, to know the financial position of the organization. So we will take up the first one. So when we talk about financial accounting, obviously the first one that comes into mind is to know the profit or loss. At the end of a period, say a quarter or a 6-month period or a year, we would like to know whether we have made profits or losses in the set period. So financial accounting helps us to know that. And then comes the second one, to know the financial position of the organization at the end of the period. When I say financial position, basically what we mean, as on a given date, how much the business owns and how much the business owes to others. In simple terms, what are the assets owned by the business and what are the liabilities which the business owes to others. That will talk about the financial position of the business. So to repeat, the first objective is for a period. The second objective is as on a given date. So at times we see the company declaring results at the end of a period. They are all basically the product of or the end result of financial accounting process. And next we have the cost accounting. In very simple terms, the objective of cost accounting is to ascertain the cost. When I say cost ascertainment, it in a very simple term talks about what is the cost of manufacturing and selling a product or providing service. You may wonder whether the objective is so simple. Yes, to start with, cost ascertainment is the objective. But with the help of cost ascertainment, various things can be done. Without knowing the cost, how will you fix the price? So cost ascertainment will help us in price fixation. Unless you know the existing cost, how will you plan for cost to be calculated in future? So it helps in cost planning. Unless you know the cost, how can you control it or how can you reduce it? So it leads to cost control and cost reduction. And unless you know the cost, how can you develop strategies to control it? There comes the strategic cost management. So even though we started with a very simple term, cost ascertainment, it leads to a lot of other activities, and that is why cost accounting is so important and relevant. When I explain this in the class, many times students get a doubt. Both financial accounting and cost accounting takes the same data. So why we require two things, or exactly how they differ? Let me give you an example. Assume you run a furniture business. You sell tables, chairs, sofa sets and so on. If I ask you what is the profit you have made in the last 1 year, you will refer to financial accounting information. If I ask you what is the cost of one single chair that you have manufactured and kept ready for sale, then you can't refer financial accounting. Obviously, you will come to cost accounting. Why? Because financial accounting talks in total. Financial accounting is wholesome in nature. Financial accounting gives the complete picture. But if I want to know about one unit, if I want to know about a particular item, then I need to come boil down to cost accounting. That's where the difference is. So now let us move on to management accounting. The objective is to provide the management with information taken from financial and cost accounting so as to facilitate decision making. So if you ask me in the most simple terms, can you tell me the objective? I will just say decision making. Management account helps the top management to take decisions. See, day in and day out, lot many questions come into management, lot many problems arises. To find solutions, to answer those questions, top management requires management accounting. How? A simple example. Should I export goods to foreign countries? If so, at what price? Management accounting will help you. I have 10 products in my product line. Should I discontinue one or two? And which one? Management accounting will help me. Should I make this product or should I outsource this production to somebody which will be beneficial to the business? Again, management accounting will help you. So management accounting basically takes data from both financial accounting and cost accounting and then uses the data to develop answers for day-to-day managerial problems. And that is why anybody who is good in management accounting should obviously be good in financial and cost accounting also. So to quickly sum up, we have three branches: financial, cost and management, and all these three have their own objectives. Thank you.